Alrighty. Good evening, everyone. So good to have you with us for tonight's training. So tonight is 102. We're getting into the fancy bells and whistles of our TrendForce Indicator strategy tonight. So if you haven't seen 101, if you just landed on this video somehow, find 101 on the YouTube channel and watch that. That is amazing. We did that 2 nights ago. Dad stripped back everything, went straight into the basics of all the different moving averages, what they are, and why they are the ones that we chose. And tonight we're going to get into the technicals of all the different signals and the flary bits that give our indicator a little bit of extra pizzazz. I don't know. You guys give me a word for it, because we've got emojis and rockets and explosions and all sorts of lightning bolts and things to make it fun. So without me waffling anymore, we're going to dive straight into the source tonight. So I'm going to hand over to Dad and we're going to dive into it. All right, let's go. Dad,
cool. Good evening.
Gotcha.
You got me. Good evening and welcome. Thanks so much for joining us. Trust you got something out of our first night on Tuesday, 101. Tonight is 102, which I'm very excited about. I mean, I'm just loving this whole journey. I trust you are too. And for those who are new to trading, I hope you're learning very quickly. We try to put as much as we can to get all the new guys on board. So I think we did 3 sessions last week, including the live session. This week will be 3 too, with tomorrow morning's live. So we're trying to do our best we can. You know, it's always keeping that fine balance. We don't want to bore our older students who've been doing this for about 4 months already. But you want to, hopefully they're learning as we're teaching some of the new things. But I'm sure there'll be value for everyone tonight. So we really are excited about tonight and what is happening. I mean, how the moves on the chart's huge, unprecedented. I mean, this is historical. The pullback today, that big move, was the biggest, I think, for the NAS, was the biggest in NAS history. It's never seen kind of a pullback like that huge move. I mean, it was bigger on the Dow, but they have been bigger before. So this is crazy times to trade. So it's a little bit wild. You know, it's historical. We've never experienced this before, but it will settle a bit and make it more tradable, a bit safer. Then there will be huge moves. I think I said on Tuesday, what happens is, when you have these big moves, it spreads out all the pivots. We'll look at those tonight as part of tonight's teaching and training. And those pivots largely determine price action. So they get stretched out. And that means, you know, trades take bigger runs. So there's some great opportunities, a great time to get on board. So been a bit risky the last couple of days, but it's going to settle down and there are going to be some great waves of trades to take. So it's good to have you all along. I'm going to jump in straight and start sharing my screen. I think Charles already given me permission. So here we go. I've called this my Zoom training screen. So hopefully my screen is coming loud and clear, and I'll just move the faces up to the top. All right, so here we have got the Dow. It's my kind of go-to. It's something I do like to trade. And I'm picking up really from where we were last night. So everything I covered up, Tuesday night, everything I've covered, I've left on, and we're just going to build it up from there. So what I've got here, I've got version 2.2 that is coming on Tuesday. And we've just been chatting with Ty as well. We have thinned out some of the moving averages, these trend zones, so a bit thinner than what you're used to. And but of course, it is editable. You can change that. Plus, the new MACD is coming out, 2.1. That's got alerts for the color change. Every time you get to bright red, that would be a great alerts, or bright green would be a good alert there. You get alerts. Just, by the way, what's a good function, before I forget, there's so much to teach about, you know, displays. What's good with the MACD, because it changes a lot. It's not like, for those who know an RSI stochastic, that's got a set scale, 0 to 100. The scale on the MACD moves depending on volume. And there's a great little, if you right-click in the price scale, the volume scale, and you click auto, which I have on, then if you just scroll back, the MACD always fills the screen nicely. Otherwise, you're going to keep stretching it as, you know, as volume and the trade plays out. So that's just a little tip there. So we're going to jump straight in, and we're going to look at all the different bells and whistles. I mean, I think that gives us an edge in trading. And I mean, there are a lot of bells and whistles, and I've always said you don't need to have everything on. I prefer them all on. That's, you know, basically this indicator I've produced out of my journey and wanted to be really sure and confident of taking entries or re-entering trades. So you don't need them all on. I'm going to go through all of them. I trade with all of them on. And then hopefully we're going to learn something. So I'm going to start not too methodically. I'm going to start, first of all, just talking about candle strength intensity. At the moment, all my bullish, bearish candles are red. all the bullish candles are green, but there's a function that I found very helpful, and that is called candle strength intensity. And so you can see here candle strength intensity, and we've got 6 colors here. And so you'll see when I turn it on, if it's black, that is hollow, the trend is weak. If it's a full color, trend is strengthening. If it's bright, trend is very strong. And also the same with the reds, dark red, the trend is strong, and bright red, very strong. So if we turn that on now, you'll see that all the colors, the candles will change color. So it'll take a minute to load. So here we can see, here's a good example. There was a signal here we'll talk about later when I turn it on. But we can see once the trade turned around, and here's this great, by the way, the great Heikin-Ashi pattern I look for. We've got a bearish candle, a bullish candle, flat bottom, then a doji, wicks on both sides, followed by a bearish candle, a flat top. That's what I love about Heikin-Ashi. There was a sign that this move was reversing. But you can see how the candles changed color in this trend. They started off hollow, which means the trend was weak. When it changed to full color, that means the trend is getting stronger. So that means not many sellers over there. When it goes dark, more sellers are getting in. When it goes bright, that means a lot of sellers are jumping in. And so I love it when I'm in a trade and the candles change color. Once they go bright, you know that the trade's going to move. I mean, it's the same for buyers. I mean, this was a bit rangy in the day. I mean, rangy in inverted commas. But if we look at some of the trades this morning, we'll come back to this trade. We can see, look at this nice Heikin-Ashi here, reversal pattern. Bearish candle, flat top, followed by doji, wicks on both sides, then a nice bullish candle. It was hollow, candles were hollow, and then we see them getting to full color, a bit of a pullback, bright, and it moves up. So I always look, I find that those help me to keep in a trade. So everything we've done in developing this indicator is to try and make trading easier and to help us keep in the trade. And so obviously the same pattern, hollow, not strong, full color, stronger. When it's bright, it means a lot of buyers are jumping in. And so I have that function on all the time. I love to know, what strength the particular trend is. So as I say, the indicator is called TrendForce for a reason. We really want to trade with trend and help everyone who uses it identify trend and to stay in the trend as long as they can. So that's the simple part. Okay, now we're going to look at our buy signal. And so I've got it turned on right now, buy and sell signals. Now it's pretty simple that I spoke last night how buy signals are generated when we're above the 233 and sell signals are generated when we're below the 233. Remember, this corresponds to the 15-minute trend. So from that point, the 15-minute trend was in a downtrend. All right, so there is one other little function I added a little while back, and there was an example this morning, is that if we look at the indicator here, I've never seen anyone else do this, but we have got different colors for our buy signals if it's very strong. So if we looked, here's our buy signal, I've got it turned on. You can see there's the dark green, that's the standard, but there's also a bright green. The same with the sell signal, dark green is standard. And sorry, dark red is standard, bright red means a strong trend. So when you see, there was an example this morning, it doesn't always happen, but here we can see, boom. Here we can see this buy signal. Not sure if it's clear on your Zoom screen, but that is bright green. Whenever you see a bright green signal, price is going to move. Now, this is kind of unreal, circumstances with the massive moves with the Davos and things. There was a 400-pip move. But look for the change of color. I saw that. I did that once because I just missed the trade. I was looking, I was a bit iffy, and I just left it. And then it dropped like anything. And I thought, what caused that price to drop? It was a sell signal. And then I realized there was other things going on. So I've worked a bit of coding into those signals to give you a good opportunity. So when you see bright green or bright red, those are very strong signals. All right, so I want to talk a lot around the buy signal. That's the first big chunk. So talked about the buy and sell signal. Then the other things we're slowly going to add. The next one is what we call buyer and seller momentum. So I'm just going to turn that on at the bottom here. And you can, of course, change the colors of anything. So we can see these are diamonds. And with anything, you can change the shapes. You can make them any one of these shapes. So there's a lot of options to change the shapes. I like the diamonds. And so buy momentum, is a green diamond, and seller momentum is a red diamond. So these are powerful. I said that at an earlier training, these diamonds are as good as sell and buy signals. So, for example, there's a sell signal. You can see there's also a diamond on the same candle. Often they come one before, but this was a quick turnaround. Again, you can see the pattern. Wow, it's everywhere tonight. You can see bullish, doji, bearish. That's great confirmation. That little pullback has reversed. So you can see there's a diamond. When you get a sell signal with a red diamond, that means that makes that quite a strong signal. And so you'll see they will appear, quite often there's one, although that was range, but they will appear often with the signal, often just before. Now, this is quite a bit rangier, but you can see you often get a warning. That's what I like about the diamonds. So there's a diamond over there, and it comes just before a sell signal. I say not ideal because we're rangy, but these diamonds, I've got them finely tuned, so they often will appear before a sell signal. There we can see there's seller momentum before. Now, sometimes they will appear without a sell signal. So these are good. It's using completely different data to the sell signal. So the sell signal is measuring something completely different. I'm not telling you what. That's my secret sauce. But you can see there is a red diamond. Now, there were reasons maybe not to take that, but it just shows how accurate are. There you got the same pattern, bullish, doji, bearish. There's a little reversal pattern, and you got a diamond. That trade was going to move because of that. And so the green diamonds we'll see appear regularly. They're also great to re-enter trades too. So the green diamonds also appear. So there's buy momentum, and that gives you a warning. So very often, as I said, they'll appear before a signal. So when I see a diamond, I may not enter the trade, but it's telling me there's a high probability that a buy signal is going to come, especially like here we are well tuned in this. Although the light's orange there, it would have been green this morning. Was wow, look how far above the 233 we were. And so you get that warning. That is buyer momentum. And that warns you before that a buy signal is coming, and that can get you ready. So this is really measuring momentum, this diamond. It's looking at the balance between sellers and buyers. I mean, the battle in trading is between sellers and buyers. Sellers want the price to drop. Buyers want to push the price up. And this little diamond is measuring the momentum, who's got the upper hand. So yeah, obviously, the buyers are in control. The sellers jumped in to push price down. We can see the buyer said, no, we're pushing price back up, and up it went. So these, when they appear with signals, it makes the signal very strong. If they appear before, it gives you a warning that a buy signal is probably coming. But where I use them most is to re-enter a trade. So that's why I've actually put these, one of the reasons why I put these diamonds in was they're great to re-enter. Whenever you see one after a pullback and see a diamond, price tends always to move. Now, there already was a buy signal there, but if there wasn't, we can see, that trade went up over 170 pips. But if you go and back test it, whenever a diamond appears, price tends to move up. And a lot of the time, if you wonder where you put your stop loss, almost every time it's actually safe to just put your stop loss where the diamond is. So if you took that trade, you would have needed a stop loss of 33 pips. If you went for a 2-to-1, well, you would have got 2-to-1 already over there. You could have let it run. So that's a great way to re-enter trades. There again, you wouldn't have got stopped out. You would have needed a stop loss of 50 pips, 2-to-1. Gee, market's crazy. There's 100 pips there. So look for those diamonds to re-enter trades. Obviously, the same with sells. When you see those diamonds appearing, we're a bit bullish this morning. We won't go all the way back to the bearish thing. But those diamonds are really a really good part of the strategy. They're very accurate. As you see there, price dropped. Almost every time you see them, there is good price action. And so if you did enter the sell here and you pulled out, if you wanted to re-enter again, there's a diamond. You wouldn't have got stopped out. It would have been tight. You could have put it higher. But that means safe to re-enter the trade. If you didn't take that sell, that red diamond means safe to re-enter the trade. Wouldn't have taken that one. Or that one, you would have seen that the 3-minute wouldn't be in alignment. So look for those diamonds. Remember, red is seller momentum, green is buy momentum. And again, that was good. You can trade with them alone. I believe they're very good for buy and sell signals by themselves. Then the next thing we're going to add is what we call our boosts. So I'm going to turn those on next. So that's the little explosion emoji. Here we got our boost and rocket signals. So you can see now that they've plotted. So I'm trying to see where there's all three looking. So here's an example. You can see we've got a sell signal, a diamond, and a rocket. There's also a diamond. There's a rocket, but wouldn't have taken that one sell signal. So this boost, so the difference between the boost and the diamond, as I said, is seller momentum. The red, that is measuring the momentum between buyers and sellers. But this boost signal, I'm not giving away my coding here, but that means that price has crossed a crucial level and it's probably going to keep on going in the direction of that boost. So obviously when there's range, it's not always accurate, but here's a good example. So when you see them together, when you see a buy signal with a boost, that means that's a high probability trade. So that boost there means price has crossed a crucial level and is unlikely to reverse back down again. So I mean, a bit rangy, so not always 100%. So this is the signal I wanted to look at. So over here, there was this massive move that just took place not that long ago. Can you see there was no sell signal generated? Because at the time, price hadn't quite closed below the 233. And so, but what it did plot was a boost. So at this point, what the charts are telling us is that price has crossed below a crucial level and is unlikely to reverse and go the other way. So as again, you can treat this boost signal just like a sell signal. And so here we can see, I mean, look what happened here. Price dropped all the way down to over 400 pips. Huge move. And so always look for these boosts. Again, you don't need, that can be a signal by itself. The same with the diamond. It can be a signal by itself. And it's nice when they're grouped together. I mean, this move was losing momentum here. We can see already we're not quite aligned on the 1 minute. I mean, there were reasons to enter based on the 3 and the 8 minute. Then we've got a sell signal and we've got a diamond. That means there would have been enough momentum to get into a break-even position, at least profitable. I mean, that candle would have opened a bit higher up over here. We can see that trade was still went to TP1, 150 pips. But what I like about the bells and whistles, there's a good example, is that, you know, you got the sell signal, you got the diamond on the same candle, which means there's seller momentum plus a sell signal has been generated. So you jump in on the next candle, you get a boost. That's awesome. When I see that, I think, awesome. There's a boost in the right trade, and sure enough, price went down. So you won't often see, obviously, remember, in range, this thing will look like a Christmas tree. Signals will pop off. It's impossible to avoid false signals. We've done a lot of coding. Tara and I have put our brains together to rid the indicator of as many false signals as possible, but it's impossible to get rid of all of them. So, but what you'll see with this boost, you hardly ever see a boost and price going the other way. So again, the diamond and the boost are very strong in terms of predicting price movement. So keep an eye out for those. Now, there's probably the rockets don't appear as much. So I'm trying to find an example. There was an example in range. Let me just look back, see if I can find. Okay, look, here's not a good example. This was counter trend. So let me see. Here we go. Here's a good example. Can you see this rocket? I know things are not always clear on a Zoom screen, but here we go. Here's a buy signal, and there we've got a rocket. Now, whenever you see a rocket and you're with trend, I mean, price is always going to move up. I mean, that thing shot up in 160 pips. So all a rocket is, it's combining. This is just what we've just added a bit of fun to the indicator, having fun with programming, is when you see a rocket, it means there's been a boost and a diamond together. So if I turned off, let me just turn off buy and seller momentum. Let me turn off the boost and the rockets. And what you will see now is just the diamond. All right, so there's a diamond. But when I turn on boost and rockets, you'll see that the diamond will disappear and instead you will find a rocket. So there's a good thing. So if you're in a trade and you see a rocket, even before that pullback, I mean, there was still a good 64 pips. That would have been a good trade. So look out for the rockets. I don't know if there's another example, but again, a rocket is a strong signal. So they do appear occasionally. I mean, this was very rangy, but still there was a rocket. I mean, that candle would have opened somewhere over there. I mean, price still went up 200 pips from that rocket. So we put a rocket because it means price is likely to rocket up. So yeah, I mean, look at this. This was the big move. This was a good one. So there you've got, this was at 519 this morning. The buy signal, bright green, that means it's strong. Plus, you've got a rocket. I mean, we don't know where that candle would have opened. I'd have to go back and check. But that was that massive trade, 1,800 pips. So rockets are good. Rockets means price is going to rocket. All right, so let's just keep on working through. Let's just get back to maybe where we were this evening. You can click that arrow right, and it'll take you back. All right, so we're just slowly working through all the bits, the bells and whistles. So these are the crucial parts, the bar, the rockets, the diamonds. Next, we're going to turn on trend lines. I'm just working methodically through the inputs now. So I love these trend lines. I modified them from version 1. So there's more than one way to draw trend lines. You could turn your chart into a spider's web. All right, but what I changed from version 1 is I've got them extending further. So we can see this one was plotted way back at 5:45. We can see it would have plotted on that low point. We can see price broke through, went up, tested, went up. Once it broke through there, we can see how price drops. So these are generated automatically. The green means support trend line, red resistance, and they kind of plot from time to time. But I also draw my own. For example, I mean, it probably will plot a resistance line down here, but I'll be looking at drawing these kind of trend lines all the time, seeing what price is respecting. This price may well make its way up. So they're not perfect, but they do add great value. And especially I've got them to extend way further. So look for price to test and retest them. You'll see them on high time frames. They plot differently. Let me just see if there's anything here. I'm looking at the 3-minute and the 8-minute, nothing to look at right now. But you can see when they break resistance trend lines, is often a move the other way. I mean, this is going all the way back this morning. May not be visible on my 8-minute chart, but price broke through that resistance trend line and then kind of fell off a cliff, hundreds of pips, all the way down to where it is now. So those trend lines are great. I've used them, obviously, I've obeyed them, followed them, and found them incredibly useful. Let me just get back to my 1-minute chart, blow that up. So those are the trend lines, very helpful. Then the next is the POC. So if you're not familiar with trading, you may not know what the POC is. POC, as you can see, stands for point of control. So what that list line means, it's plotting. You can see it's just moved. It is dynamic. So this is plotting where most buying and selling will. You can see we're right. It's just moved. It is dynamic. it's moving because it's just busy calculating right now. It won't always move as much. But this line tells you where most buying and selling is concentrated. And we can see price respects it quite substantially. And so kind of one of our rules in trading is if you're above the POC, you trade to it. If you're below the POC, you also trade up to it. And you can see price hardly ever breaks. The reason is price hardly ever breaks through the POC. So point of control, it's where buying and selling is concentrated. So it often serves as a target. And so when I'm looking to take a trade, I will see, is there clear space to TP1? Now remember this POC was up at the top when this trade started, so it wouldn't be valid here. But if the POC was in the way, I would never take a trade hoping I was going to just break through, because you can see how price respects it. Now this was plotted later because it's showing where price is concentrated. Look how accurate it is. Price bounced off that point, tested there, bounced off that level. That's 40,068 on the Dow. We can see how it kept testing this level. Now we don't know what is there, but that's why the POC plots it and tells us where price is concentrated. And so generally when it breaks through, price tends to fall. But of course we are slightly counter trend. Well, I mean, not fully counter trend, but we are above the 1 hour. We can see that is orange. Our TZA, we covered that last night, means you are between it. So let's just look at the 3-minute with some different time frames. It may plot in different places. Now it's still up to where our original one was. So we can see on the 3-minute, I'll just blow up my 3-minute screen. That hasn't moved yet. But again, you can see how price, if you look where this POC is plotted with the coding, it's pretty accurate. You know, price is breaking above and below, above and below, above and below, testing it regularly. And finally, when it does break and close below, we got that 400 pip move. And so it'd probably even be different on the 8-minute. That's even higher up on the 8-minute. It's still measuring the volume from this morning. So we can see this is where it's lying on the 8-minute. You can see our price tested, came up, tested twice there, and rejected that level, and down price went a massive fall. So that will change. Remember, it is dynamic, so that will move as volume changes. So remember again, we don't try to trade through it. We trade to it. It's often the target. So price very seldom flows straight through the POC. It tends to bounce off, retest before it breaks through. So that's our POC. Then the next big thing is our pivot lines. All right, so we've got these support and resistance lines. Now we could probably spend a whole night talking about these. This is quite a key part of our strategy too. So you can see they've just plotted. And I have moved the labels to the right and the ability to change them. So that's coming out in 2.2. There were, it's you've heard me say there's a plotting problem with Heiken candles and trading. We've actually sent them photographs today to try and get a reaction from them to see if they can fix it. But these pivots are pretty important in terms of understanding price action. So basically what these pivots are measuring, and the advantage you got in this, I don't think anyone's done this before, I'm just saying, not trying to boast, where you can have all 4 levels on one chart. I've seen people only manage to do one level, or they put it back, and then to change them. So what these are, these levels, here we go. So we're looking at the support and resistance pivots. There's daily, weekly, monthly, and quarterly. So these are based on highs and lows using Fibonacci calculations. So the daily levels, the weekly levels, the monthly levels, and the quarterly levels. And these are huge for support and resistance. Again, we find that price, it does go through them, but very often price respects them and they bounce off. Like, I think it was it yesterday? Price reached the quarterly S5, which was the lowest you can go. So we've got all the colors here you can change. There was no way, I couldn't get rid of these or compact them, but basically they all go from S1 to S5, daily, R1 to R5. So S for support, R for resistance. We've got weekly, monthly, and quarterly. So price will often respect those lines. So we can just see here was a R3 daily. You can see there has been some respect. And when we do our live trades, I often reference them. Here we got a quarterly level. There's also been a bit of respect there. So very often price will pivot off them exactly. If you follow these lines back, you can see obviously when there's massive market movements, it's not always true. So what is this? Sorry, let me just go back. I forgot what this one was. There's an R1 weekly level. So if you look back here, how price respected this R1 week, price came up, couldn't get above our R1 weekly level, came down. Then it came back and it retested it, spent some time there, broke up, shut up. Then it went up right up to a quarterly level over there, bounced off another pivot there, and we can see how price respected that pivot there. So if you just backtest these pivots, they're huge for support and resistance. Now, you don't need to have them all on in one screen. What I have sometimes done is I turn the quarterly ones on the 8-minute and the weekly on the 3-minute, and it does space them out, and just have the daily and the quarterly on the 8-minute, monthly on the 3-minute, then daily and weekly on the 1-minute. I'm used to seeing all of them, so it's not noisy to me, but they're very useful for targets too. So very often, one of our rules, for TAS, we're going to do the rules on Tuesday again in more detail. S is for space, and I like to see at least a clear path to TP1 without a pivot in between. So this one would have been slightly risky, this trade, because there was a pivot between TP1. There are reasons because of the volume for it to break through, but you can see how it came to TP1, it bounced up, and this is a good example here. Look here. It came down to the R3 daily, bounced off, went back and tested the S4 quarterly, and then finally broke down, bounced off our POC, and you can see some little testing there before price moved down again. And so these are huge for support and resistance. So remember, the daily ones, they measure the high and lows of the previous day, then add Fibonacci calculations based on probabilities to work out all those 10 lines. And the same for weekly. It'll take the weekly They're based on the previous week to calculate the current week, highs and lows, the same for monthly and for quarterly. And so always keep your eye out on those. Huge for support and resistance. Great, I think we're doing great. We are slowly getting through everything here. Then the next one, this is pretty simple, is our trend zone tables. So I find these useful just for looking ahead. So you can see here we have the trend zone table, and we also have our MACD trend zone table. And so these are basically telling you, I'll just take a few seconds to jump on. So here they are. So this tells you what's happening. So the trend zone, we can see, obviously we know by now, red for down, blue for up. This is telling you, so if you looked at, this is telling you, for example, the 3-minute is red, which we can see. Also the 8-minute red, we can see that's all correct. But it's telling you H1 and H4 haven't crossed over. So from the M1, the 1 minute, to the 15-minute, we're still bearish, we're in sell mode, but high time frames haven't crossed over. So H1, which is the 1 hour and the 4 hour, are still in buy mode. And the same for the MACD. I thought I'd just add that so you can have a look. We can see the H1, we can see the H1 is bearish, that has already crossed over. So if we change that to the 1 hour, that would have just gone red, while the H4, the 4 hour, is still bullish, it's still blue. So that gives you a quick look at the trend. So I mean, when I took that trade the other day, whoa, look at price dropping here. This is falling off a cliff. It's broken through, look, it tested the 987, and now it's really falling off a cliff. There we go, look at that. There was a counter trend signal generated on the 8-minute, and since that counter trend signal, 100 pip drop just from that one counter trend signal. All right, so we can see that there was a diamond to re-enter. Would have been risky, by the way, just analyzing this quick re-entry because of the 987, but high time frames, bully low time frames, that trade could have been on. You would have at least got into a risk-free position up to there. But anyway, so those are our trend zones. What I do is to save space, I only put them on the 1 minute. You can see on the 3-minute and 8-minute, because this is quite a busy indicator, if you looked here, you can see that I've turned those tables off. So you just got to uncheck them. You have the ability to show them. So I just show them only on the 1 minute to save space, but it gives you a quick look. So I was saying before I got distracted by that candle, when I took that 100 pip trade, I think it was last Saturday, it was a low risk trade because the trend zone table was all red and the MACD trend zone also all red. The trend zone alignment line was red. Everything was bearish, pointing down. So that trade I felt very confident of taking. And so that's why we've tried to, in this indicator, give you as much information at one glance so you can make a good decision, informed decision about trading. Okay, so those are our trend zone tables. Then I already got the take profit and stop loss lines in. You can change them. I've just set them just through my research. TP1, you can see if we look on under the gear item and we look down to our take profit and stop loss levels, you can turn them off. So TP1, take profit multiplier, that just means 1.5 means it's 1.5 times your entry price to your stop loss. And then there's a 2-to-1 and a 3-to-1. I mean, if you are a very skilled trader, you can easily change that to 4-to-1. And then that means on the chart, that's going to move down another chunk. So these you can edit. Just through my research, I found that those were great numbers to work with, but you can edit them. Now, remember, on higher time frames, like on the 3 minutes, sometimes these do move because the stop loss will jam in first. That's going to be stable. But while price is moving, the program is calculating the distance between the stop loss and the closing price of the candle. So sometimes it is going to move. So these may move slightly, not hugely, but nothing's gone wrong if TP1, if these three take profits are moving, then it just means that there's still volatility and they will take time to settle down. But once they're there, they're there. So, I mean, this trade hit TP1. There was a pullback, but we can see it's gone all the way down to TP3. Wow, 265 pips that trade was. That would have been a great trade. All right, so I love this. I love going for targets. That's my philosophy in trading we've tried to make this mechanical as possible. That's why we've put in these targets. So, for example, in this trade, because of the 987, TP2 would have been safer to go for than TP3. So I'll always try and aim for a target, make it mechanical, non-emotional. I do have a trailing stop loss. We talked about that, I think, last week. So I do have a trailing stop loss, but I'm always going for a target. There's nothing better, I tell you, than seeing a wick going through your take profits. It's a great feeling. All right, so those are our take profits. Then the next thing is I did the trend break signal. Let's look. I don't want to talk too much about the counter trend signal. I'm going to turn it on. The default is off, but really you need to be more experienced for counter trend signals. So here it is. So if I turn it on, you will see that that signal will plot from time to time. Well, I mean, you can see it's on the 8-minute. That counter trend signal generated. There wouldn't have been many today. I'm just looking to see. Here we go. Here's a counter trend signal. So this is really more for skilled traders. All right, there will be a video. You can see that counter trend signal did generate over 100 pips. So they're pretty accurate. This, I mean, the coding that's gone into this, I think it's about 120 lines of code to try and work out a safe signal to enter. And so that is massive, this signal. So generally it's pretty accurate, but you do need to understand a lot more of price action before you take it. So for learner traders, I would say keep it off. Don't be tempted until you've really got to grips with price action. So I'm not going to say more about that tonight. Then the other big thing I want to talk about is support and resistance zones. This is quite a big part of our strategy. So let me turn those on next, where they're hiding. That I write down here, support and resistance lines with breaks. So that's that little lightning bolt. We'll see if we can find an example. That is my 100 pip trade. I entered a trade, took 100 pips based on a lightning bolt. So you can see, if we look here, these zones. So this is what we call a resistance zone. They're different names. Some people call them supply zones. I kind of, I use them interchangeably. But these zones basically is a zone of resistance. So it means price is unlikely to just smash through. Normally when price hits a zone like this, it tends to bounce off, come back, retest. And that's why I added the lightning bolt to it. So the lightning bolt only plots when you've broken through a zone. So we've got a red zone, which is resistance. Now the way these are plotted is all moves end with a big wick. All right, so often we call them wicked wicks. Beware of very big wicks. So what I've done in the coding, so I didn't invent these zones. I just did the coding to suit our strategy. Whenever price reaches a high point, so we can see here that for quite a long time, an hour or two, this was the high point of a trade. They don't plot straight away. So the coding is looking for a big wick at the end of a move, and then it plots a zone. Because what big wicks represent is like a movement in the other direction. So whenever you see a big wick, what this wick tells us is that buyers were trying to push the price up, but sellers pushed it down. So this candle closed there, but that is a big wick. So big wicks again. So if it's a bullish candle, that means buyers were trying to push price higher, sellers pushed it down, and then price reversed. So they don't plot straight away. So this would have waited for some time to see if there was another high in a certain time, within a certain time frame. There was no high. So then it plotted this resistance zone or supply zone. So this means that there are, remember, sellers pushed that down. This means this is a zone where sellers are waiting. There are sellers in this zone to push price down. That's why we don't trade straight through them. Is there free space? So what I've done with our coding is that when price breaks through, they change color and it plots a lightning bolt. So we can see here. Now this is a good example. This zone wasn't here, 10, 15 minutes ago when I was looking at the POC. But since then, this would have plotted as a green support zone or demand zone. So this normally would have been green. And that would tell you that there are buyers here. And so that would have stayed. You can see how price, although this wasn't plotted then, price came down, respected that zone, hung around that zone. It broke through, then retested, and then price dropped, and now in a bit of range. So if we look on let's just look on the 3-minute. We've got a resistance zone up here. So this here, as you can see again, we've got a resistance zone at the top, and here's maybe a better example. So here, the indicator generated this supply zone. This originally would have been green. That's why I've got dotted lines. You can see that you got a full line always on the outside, full line, dotted line. That's just to let you know if you forget, wow, the dotted lines on top, that must have been a support zone or demand zone. So here's a classical example. So the indicator plotted a support zone would have been green, meaning sellers are here. We got the signal, counter trend signal. We can see as price closed below, it generated that lightning bolt, and that is a good enough signal often to enter a trade. And so again, and this would have then changed color. So unfortunately, I haven't got any green ones. You know, to save space in backtesting, I tend to delete. Let's just see on the 8-minute if there's still a demand zone. Someone just texted me. Don't know who that is. Don't even try to message me. So let's just.
It's not me. Don't worry.
Not you. Okay.
Thought it might be your alerts going off.
I thought Ty's texting me because I've lost my camera, I've lost my feed. All right, so here's a good example on the 8-minute. Look here, this generated this demand zone. This was generated earlier this morning, just after midnight. So this means buyers are waiting down here. This is a demand zone or support zone. And I use these a lot when I trade because very often, we're in unusual conditions, but often I look on the 3-minute. I'm looking to see where are the buyers, because very often price goes up, price goes sideways, price comes down. Very often it comes back to a previous demand zone or support zone. So when I'm trading, I'm always looking for these. So obviously, the higher the time frames, the further they're spaced. So here we got sellers way up there on the 8-minute, buyers way down there, and we'll obviously have to see how that all plays out. So that's basically how the zones work. So I'm almost done. Then finally, I'm almost done. We're doing good for time, 8:45. So the last thing I think I've got to do is just our pullback. Our higher highs, lower lows. This is also a great little part of the indicator. So you can see these stars. We got a higher high star and a lower low star. Now this just measures, have you broken the high like X number of periods back? So I've got the default set to 20, which I find works very well. You can increase it. So what that means is let's just have a look at some examples. So let's just have a look here. So here we've got a green star. So if you look at the 3-minute, this is a good example. Originally, this red star would have been sitting on this candle. So let's go right back. It originally would have plotted as we broke a lower low. It's like chasing down. So it would have plotted there and there. It would have been slowly following down. Candle would have stopped there because price then pulled back. So it would have been sitting over there and it would have stayed there. And then eventually when price broke the previous low within 20 candles, it would have plotted there and then there. And now it's going to hang here until it breaks another low. So I find it's very useful because sometimes, price is going sideways and you're not sure, is price moving down? And the star will be hanging back to the left. Then suddenly the star plots. Then cool, price is moving. It's broken a previous low. So I find that hugely, hugely helpful. And the same, that's the bearish red star. And here we have the bullish green star. The same would have applied. So for example, that green star would have been sitting above this candle, would have stayed there, and only over there would have broken and then plotted. So obviously that reached a bit of a high there, but they're very useful. I use these stars a lot. It helps me to enter when you see prices both broken a previous low or a previous high. So I think the last thing I've got to go is a nice little part we added to the strategy. I almost was going to leave them out, but Ty said, no, you got to put them in. Let's just go back to the 1-minute. And that is what we call pullback resistance and support lines. So these are these little white lines that you see plotting. So we're just going to turn them on now. So where they're hiding pullback, support, and resistance. All right, so these are these white lines. Oh, we can see now. So if you ever get a funny plot like that, click plot, reset. I mean, hopefully we're going to sort that out. And if it doesn't work, then you got to just reload the indicator. There we go. Plot reset puts it right. So this is because we've got high Kanashi candles. So you can see these little white lines plot everywhere all the time. and they work as minor support and resistance. So the zones are major points of reversal, but you also get these minor lines, and they're great for re-entry. So, for example, here was price reversed. There was a reversal pattern. It plotted a support line. You don't want to enter a trade if you're on the wrong side of a support line. So that white line was down here. You'd have to wait for price to close below it. But it's also great for pullbacks and resistance. So we can see here, price came up. Okay, broke that one. We got a sell sign that plotted there. We below that, we cool. But they're useful. You don't want to re-enter a trade until price breaks below. So there was a diamond. We can see price just broke below, cool. It's going to move at pullback. We can see here, I don't know if they're quite small. We can see a price try to pull back, and here a little white resistance line plotted, rejected it, it came down. Here it plotted another one, broke below, came down. And so these plot all the time, and they're very useful. I'm trying to see, let's go back to a bigger move. They're very good when you've got in these big moves and price pulls back. So you can see here, for example, I mean, this screen will look like this. Here was a buyer momentum. We can see once price closed above that, it was a safe trade. And I'm trying to see other examples. I mean, they plot all the time. There was a buy signal. Would have liked to have cleared that. Here's a good example. This is how I trade them. You're in a trade, it pulls back, is going to drop, and a nice little support line plots. And you can see it tested at 1, 2, 3, rejected that, and up we went. That would be in a good place to enter, by the way, because we can see on that candle, look, our MACD went bright green. So this is designed to keep us in trades longer. So if you were in this trade again, price pullback, it came back, a support line plotted to show that, well, there's good support here. Don't get out the trade. Boom, it's going to keep moving up. Of course, we got I think a quarterly support line there anyway, a pivot line, so they were safe. So these they're small, but I believe they carry a little bit of significance, and they help us to stay in trades. Look at this big trade. Let's look at this trade here we're looking at now again. When was this? This was today, 12:34. Price came up, rejected that line. A counter trend signal was plotted, and that would have been safe because we've rejected a resistance line there, and they would have opened about there. There would have been, a few pips in that. That dropped, 50 pips. That's great. So that's basically it. I think I've covered all the bells and whistles. I don't know if I've left out anything. Can you think of anything?
Oh, I can't right now, but we got one question though from Dave. So some candles, I suppose on his end,
yeah,
green outlines and red full colors, vice versa.
Let's find an example.
There to the left. There we go. Yep.
So that's got a green outline, but a red body. That means you've got a bullish candle, but there's still bearish momentum. So that's why you don't want to enter a trade. It's a bullish candle, but there's still downward momentum. So you'll find the same. You will often see a red candle. Let's see if we can find a red candle with a green body. I mean, they'll plot all the time. You'll find it when there's a lot of movement. So let's have a look here. We'll go back to when the market was going crazy. Can we find one? Here we go. So look, that's got a red outline, so a bearish candle, but a green body. That means there's still strong bullish momentum. So, I mean, that's just designed to try and keep you in the trade. So, I mean, fortunately, that one went hollow. That means weak still. So there were reasons to stay in this trade, even though there was a big pullback. So if you see a red outline, it is a bearish candle, but the green body means that the momentum is still going up. So again, everything we've designed in this indicator is to try and keep you in trades, not pull out early, and have the courage to kind of reach your TP3s. So does that cover that time? Make sense to you?
I think so. You answered that perfectly. That question was brilliant because that's something we missed to explain naturally. So there we go. Bells and whistles. There we go. Yes, thanks. Cool, Dave. Love to get that clarity. Aside from that, maybe you can visually give an answer to this question. I typed up an answer in the chat, but someone else might be thinking it, who's watching it and not able to read. But the numbers on the pivots. So, like, for instance, what do the numbers represent, like R5? So I've said in there basically, obviously, in the middle, you're going to have, say, resistance 1 above your head, and then 2, 3, 4, 5 further up, and further down you're going to have S1 for support, and the lower down you go, you're going to get to S5. So can you maybe explain those visually And there you go. You can kind of see there on the weeklies.
Yeah. So I mean, so basically they just give the order of support and resistance. So it's basically how it's just calculated on Fibonacci numbers. So it finds key levels from the day before, or the week before, or the month before, or the quarter before, and then it calculates based on probabilities what are likely to be points where price may pivot and reverse. Because as I said it on Tuesdays that everything about trading, I believe, is related to Fib numbers. All the big financial institutions, banks, etc., they use Fibonacci numbers in their calculations for where they set their big buys and their orders. And so if we can use Fibonacci numbers, then we're going to find the right pivot points. I mean, so for example, so it's linked. If you do a Fib retracement, I don't know if I'm going to get too much off point here. Maybe I'm going to make it too complicated. But basically, they all go from R1 to R5 for resistance, and S1 to S5 for support. So R1. Let me just turn off. Let's just look at the daily levels, and I'll crunch up the screen so it'll be easier to see. Let's just look at the daily pivots. Did I turn? So here we go. So we can see here. Let's get them all on the screen. So this is how they would look. We've crunched the screen up. We can see they go R1, R2, R3, R4, R5, and S1, S2, S3, S4, S5. So these are levels based on Fibonacci calculations, based on the previous day's levels of where price went to. So, I mean, it's crazy, but they just work. It's just how trading works based on Fibonacci numbers. And so generally, price very seldom gets to R5 and to S5. And likewise, on the weekly, the same levels. It hardly ever gets to those levels. So, I mean, so this yesterday when it hit like a quarterly S5, that was highly unlikely, but it still hit there. And there was a 500 wick bounce off the quarterly S5 yesterday. Massive reaction to get into that level. So basically, they just calculated using Fibonacci numbers based on levels, and price tends to respect them very strongly. So if you backtest them, you'll just see. I mean, if we just scroll back quickly, let's have a look. I mean, price, when it's going really crazy, it often just goes straight through. But generally, you know, when price is behaving normally, we can see there's respect. So you can see here, you can see as a good example, you can see here this was a bit of a stop hunt at 518. We can see how this bearish wick went almost to the millimeter and hit this pivot line and bounced off that one. And you can see here again, look how price respected this pivot exactly to the millimeter. And if you just go back, you just back test, you'll see how accurate these lines are. They're very crucial, I believe, to the strategy. So it's all based on Fibonacci mathematics and levels. You know, this is just a set formula that is used to calculate those levels, and they really just work. That's been proven over time.
So good. Thank you for clarifying that. But okay. Yeah, if you are brand new tonight, team, there was a lot of bells and a lot of whistles to take in. But you know, you can rewatch this and obviously tinker around on the indicator itself. Let me pin myself on here as well.
I'll stop sharing my screen, Ty.
Pin myself and actually turn on my camera. But obviously there's a lot to take in there. But Dad, I mean, you have designed this thing to create healthy boundaries and to create as much high probability certainty to move in a particular direction. And so naturally, if you load this indicator for the first time and you're on a small screen like a laptop, it can look like a heavily decorated Christmas tree. But the trick is obviously, like we've said, we're thinning things out. We're going to make some of those, you know, moving averages thinner. And I mean, even mentioning the why behind that, they represent zones, which you'll remember from 2 nights ago. And so the zone is actually quite larger than a thin moving average. So that's why we made them thick. But we realized, you know what, some people are doing this on their phones. You can right now customize them. You can actually make them thicker or thinner. But all of that to say, there's so many lines that we could have on a chart. We try to make less and less and less, but ultimately the style of Dad's trading, which is one of the highest win rates I've ever heard of, is because he knows where these lines are. And when you can see space, which I think right now we're going to start to see more of with these big moves Dad mentioned, that creates separation. Oh, bumping my mic. That creates separation between, as price moves and expands more, it pulls all those pivots and those moving averages apart. So we have more space for price to move in between them and greater opportunities to snipe some trades. So hopefully that's all starting to make sense to you guys. Dad, I don't know if you've got any closing thoughts around that. Otherwise, we're here bright and early at 5 in the morning for some live analysis.
Yeah, that could be interesting. We don't know what the market's going to do tomorrow. So there's more optimism. So I'm expecting, still moving up. So it's going to be interesting. It's going to be fun. So we look forward to being here with you at 5 tomorrow morning. Thanks for joining us tonight.
Sounds great. All right, well, 5 a.m. tomorrow morning, I'll drop this link in the group chat. And at the same time, guys, next week, Tuesday, we are going to go into detail on the rules. I'm also busy working on a couple videos for you. One on some of the top 10 tools I use in TradingView every single day. So I can give you guys some more clarity on the bits and pieces inside of TradingView. So you can start to skill up in that space. And another one on paper trading as well to give you some more practical details on that. Otherwise, just make sure you got the notification bell turned on the YouTube channel so you get those uploads notifications as soon as they drop. Otherwise, we'll love you and leave you there. We'll see you in the chat and I'll see you bright and early in the morning. All right.
Thanks for joining us, guys. Good night.